Some cities sell apartments. Dubai sells something much bigger. It sells safety. It sells status. It sells tax efficiency. It sells access to one of the fastest moving wealth hubs on earth. And this is exactly why millionaires, entrepreneurs, family offices, celebrities, tech founders, and global investors are quietly moving money into UAE property. But here's the important part, they're not all buying the same thing. Some are buying luxury villas, some are buying branded residences, some are buying off plan apartments, some are buying only for rental income, and some are not buying in Dubai at all. They're looking at Abu Dhabi, Ras Al Khaimah, and new lifestyle destinations that most casual investors still ignore. So the real question is not should you buy property in the UAE? The real question is where is the smart money going and why? Because if you understand that, you'll understand the real story behind UAE real estate. Welcome to Property Arabia, where we break down the UAE property market for serious global investors. No hype, no fake guarantees, no buy now before it's too late pressure. Just real market insight, investor psychology, location strategy, and the kind of information wealthy buyers actually care about. In this video, you'll understand why global capital is flowing into UAE property, why Dubai remains the headline market, why Abu Dhabi is becoming more interesting, why Ras Al Khaimah is attracting luxury tourism investors, what HNWIs really look for before buying, and most importantly, what risks you should never ignore. Because in real estate, the best investors are not the most emotional, they are the most informed. Why UAE property became a global wealth magnet. For decades, global wealth had a few obvious destinations: London, New York, Monaco, Singapore, Geneva, Hong Kong. But in the last few years, Dubai and the wider UAE have moved into the same conversation, not because the UAE copied those cities, but because it created a different model, a model built around mobility, lifestyle, business, low personal taxation, safety, luxury, and speed. The UAE does not levy personal income tax on individuals, which is one of the biggest reasons entrepreneurs and high income professionals pay attention to the country. For business owners, the UAE also has a corporate tax system where taxable income up to 375,000 dirhams is taxed at 0%, and taxable income above that is generally taxed at 9%. Now, compare that to many global cities where investors face higher income taxes, capital gains taxes, inheritance taxes, property taxes, and complex regulations. For a wealthy person, this matters because wealthy people don't only ask, how much can I make? They ask, how much can I keep? That one question changes everything. Dubai is not just a property market. Most people look at Dubai property and only see towers. But investors look deeper. They look at economic direction. They look at population growth. They look at tourism. They look at infrastructure. They look at regulation. They look at where the government is putting its energy. And Dubai is not moving randomly. Dubai's economic agenda, known as D33, aims to double the size of Dubai's economy by 2033 and position Dubai among the world's top 3 cities for living, investing, and working. That matters because real estate follows economic gravity. When a city attracts companies, workers, tourists, founders, capital, and events, property demand usually follows. Not always in a straight line, not without corrections. But over the long term, real estate needs people. People need jobs. Jobs need infrastructure. Infrastructure needs planning. And this is where Dubai has been unusually strong. Dubai doesn't wait for demand and then react. It often builds first, then the world arrives. The airport tells the real story. Here's a simple way to understand Dubai. Look at the airport. Dubai International Airport handled 95.2 million passengers in 2025, the busiest year in its history. That number is not just aviation data. it's a property signal because airports tell you how connected a city is. A wealthy investor from India can visit Dubai quickly. A business owner from Saudi Arabia can fly in for meetings. A European entrepreneur can live between Dubai and London. A Russian, Chinese, African, Pakistani, or British investor can manage business, lifestyle, banking, and property in one place. Dubai is not just a destination, it is a global connector, and global connectors attract capital. This is why location matters. A property market is stronger when the city itself becomes useful to the world. Tourism creates another layer of demand. Dubai is also one of the world's strongest tourism brands. In 2025, Dubai welcomed 19.59 million international overnight visitors, according to Dubai tourism data. This supports hotels, restaurants, short term rentals, retail, luxury services, branded residences, beachfront developments, and lifestyle communities. For investors, tourism creates a second layer of demand. You don't only have residents, you also have visitors, and visitors often become buyers. Think about it. A person visits Dubai for 5 days. They stay in downtown, they visit Palm Jumeirah, they see Dubai Marina, they go to a luxury sales gallery, they compare Dubai prices with London, Singapore, or Monaco, and suddenly a holiday becomes a property decision. This is how emotional real estate works. People don't always buy after looking at spreadsheets. Sometimes they buy after imagining a different life. The golden visa effect. Now, let's talk about one of the biggest drivers for international property buyers residency. For many investors, property is not only an asset, it is a backup plan, it is optionality, it is freedom, it is a safe base for the family. The UAE Golden Visa has made this conversation even more powerful. For real estate investors, UAE official guidance states that owning one or more properties with a value of at least 2 million dirhams can support eligibility for a long term Golden Visa route. Now, this does not mean every buyer automatically qualifies without conditions. Rules can change, documents matter, property status matters. Applicants should always check official requirements and speak to qualified professionals. But the psychology is clear. A property in the UAE can become more than a home, it can become a lifestyle anchor. For wealthy families, that is extremely attractive because they're not only thinking about returns, they're thinking about children, education, healthcare, security, banking, travel access, business access, and long term flexibility. This is why a two-bedroom apartment is not always just a two-bedroom apartment. Sometimes it is a key. Rental demand is not just hype. Many real estate channels talk about ROI, but serious investors ask a better question. Who is going to live in this property? Because rental income doesn't come from brochures, it comes from real tenants. According to Dubai Land Department data, registered tenancy contracts in Dubai increased in 2025, reaching 1.38 million contracts with a total value of 126.4 billion dirhams. That tells us something important. Dubai is not only selling property. People are actually living, renting, relocating, upgrading, and moving within the city. This is where investors need to be careful. Not every property will perform well. Not every shiny tower has strong rental demand. Not every off plan project will deliver on time. And not every guaranteed return should be trusted. A smart rental investor looks at location, community maturity, transport access, developer reputation, service charges, floor plan efficiency, tenant profile, future supply, and exit liquidity. Because a beautiful apartment in the wrong location can become a weak investment, but a practical apartment in the right community can become a strong income asset. What H&W is actually buy. Now, here's something most people misunderstand. High net worth investors do not all buy for the same reason. Some want capital preservation, some want lifestyle, some want rental yield, some want a second home, some want tax residency planning, Some want prestige, some want privacy, some want a family base. So when someone says rich people are buying Dubai property, the better question is what type of rich person? A tech founder may want a branded residence in downtown. A GCC family may prefer a large villa in a gated community. A European investor may want a waterfront apartment with short term rental potential. A South Asian business owner may want a family home near schools and business districts. A family office may look at bulk units, land, or commercial assets. Different money has different behavior. This is why Property Arabia will never say one area is best for everyone. The best property depends on the investor's goal. Dubai versus Abu Dhabi versus Ras Al Khaimah. Dubai gets most of the attention, and for good reason. It has global visibility, high liquidity, strong tourism, a huge developer ecosystem, and international buyer demand. But the UAE property story is bigger than Dubai. Abu Dhabi has a different personality. It is more institutional, more government backed, more stable in tone, more family oriented in many areas. For investors who prefer long term planning, cultural districts, waterfront communities, and a calmer luxury environment, Abu Dhabi deserves attention. Then there is Ras Al Khaimah. For years, many global investors ignored it. But now, with major tourism and hospitality development, Ras Al Khaimah is becoming more interesting for lifestyle and resort style real estate. This does not mean every project is good. It means the opportunity map is expanding. Dubai is the global magnet. Abu Dhabi is the capital of long term stability. Ras Al Khaimah is the emerging lifestyle story. A smart investor doesn't just ask, where is everyone buying? They ask, where is demand going next? The 2040 vision. One reason Dubai keeps attracting long term investors is that it sells a future, not only a property. Dubai's 2040 urban master plan targets major growth in the city's resident population with planning around urban centers, green areas, infrastructure, and quality of life. For real estate, this matters because cities need a long term plan. Without planning, growth becomes chaos. Traffic gets worse. Communities become disconnected. Infrastructure becomes overloaded. But when a city plans around population, mobility, parks, beaches, commercial zones, and residential communities, investors can make better decisions. This is why master communities are so important in the UAE. A building is one thing, a community is another, and a city vision is bigger than both. The investor who only looks at today's price may miss tomorrow's direction. The big mistake new investors make. Now, let's be honest. Many people lose money in real estate not because the market is bad. They lose money because they buy emotionally. They see a luxury lobby, they hear a strong sales pitch, they are told prices will rise. They see a payment plan and they rush. But wealthy investors usually move differently. They ask uncomfortable questions. Who is the developer? What did they deliver before? What is the payment plan really costing me? What are the service charges? What is the rental demand? What similar units are actually renting for? What happens if I need to sell before handover? How much supply is coming in the same area? Is this property liquid? That last word matters. Liquidity. A property is only truly powerful if someone else wants it when you need to sell. In a rising market, everything looks easy. In a slower market, quality gets exposed. The risks nobody should ignore. Now, this channel is called Property Arabia, but that does not mean we blindly praise every project. The UAE property market has risks. Every market does. First, prices can correct. Second, supply can increase. Third, some off plan projects can face delays. Fourth, service charges can reduce net returns. Fifth, rental yields can change. Sixth, regulations and visa rules can evolve. Seventh, global events can affect buyer sentiment. This is why no serious investor should rely only on social media videos. Before buying, always speak to licensed professionals, verify official data, review contracts carefully, and understand your own financial position. This video is for education. It is not financial advice. Real estate can build wealth, but only when bought with discipline. The goal is not to buy fast, the goal is to buy right. What makes a UAE property premium? In the UAE, premium property is not only about marble and glass. Premium means location strength, developer trust, view protection, community quality, privacy, parking, access, design, maintenance, exit demand. A badly planned luxury unit can underperform. A well positioned practical unit can outperform. This is why wealthy buyers often pay more for scarcity. Beachfront, waterfront, golf course, branded residence, large plot, low density, prime view, walkable location. These features are hard to replace, and in real estate, what is hard to replace usually holds attention. But again, attention is not the same as guaranteed profit. A famous address can still be overpriced. A luxury brand can still have high service charges. A beautiful view can still come with bad layout. Details matter. The richest investors in the room often ask the simplest questions. Why this property? Why this price? Why this location? Why now? Why the UAE still has long term appeal? So, why does the UAE continue to attract global investors? Because it offers a rare combination: a globally connected location, strong tourism, business friendly positioning, no personal income tax, long term residency options, luxury lifestyle, modern infrastructure, safety, and a government that actively plans for growth. In 2025, Dubai's real estate sector reached a historic milestone with transactions exceeding 917 billion dirhams, according to Dubai government reporting. And in Q1 2026, Dubai Land Department reported total real estate transactions of 252 billion dirhams, showing continued activity at the start of the year. But here's the mature investor view. Strong market does not mean every deal is good. A rising city can still contain overpriced assets. A famous developer can still launch an average project. A beautiful brochure can still hide weak fundamentals. So the opportunity is real, but selection is everything. That is where smart investors separate themselves from emotional buyers. Final takeaway: the UAE property market is not just about buildings, it is about global wealth movement. It is about where entrepreneurs want to live, where families want safety, where investors want flexibility, where businesses want access, where tourists become residents, and where cities are being built with long term ambition. Dubai is still the headline. Abu Dhabi is becoming more important. Ras Al Khaimah is becoming harder to ignore. But the real opportunity is not simply buying in the UAE. The real opportunity is understanding the reason behind each location, each project, each price, and each buyer profile. Because in real estate, the crowd usually sees the building. The smart investor sees the direction of capital. And right now, a lot of global capital is still watching the UAE. If you want clear, data driven, and honest UAE property analysis without the hype, Subscribe to Property Arabia.
Every week, we'll break down Dubai, Abu Dhabi, Ras Al Khaimah, luxury projects, investment areas, rental trends, golden visa opportunities, and the risks investors need to understand before buying. Because the best property decision is not the fastest one, it is the most informed one. This is Property Arabia, and the future of real estate in the UAE is only getting more interesting.